Hello, lovely people out there. I'm Kate Hill, and welcome to another Adviseable Property News Update. Now, you know that we give you the absolute best commentary and content on our channel. So before we do anything else, please let me ask you to subscribe to our channel. Hit the notification bell so that you're getting all our expert hints and tips around buying, owning, and investing in property as soon as we post them. And if you're enjoying the free content and you're finding it useful, hit that little like button too. I really appreciate the support on that one because it means YouTube will recommend the video to other people. To really quickly explain who the heck I am and why I'm sitting here talking to you about property buying, owning, and investing. I'm a property professional, don't hate me. I've been in real estate for a really, really long time, advising and helping people. I've seen most things happen. I've gone through the cycles, the ups and the downs, and I myself own and invest in property, and I'm out there every day at that property coalface. I also genuinely care about empowering you to get the best outcomes for yourselves, so stay tuned. So join me for the next few minutes while I cover off on. Another major institution has revised and upgraded their forecasts for residential housing. The latest Victorian days on market data. Vacancy rates remaining really, really low in most centres across Australia. And the Reserve Bank of Australia has tipped the Australian economy to make a rapid recovery. You can also watch another video here, and I've listed it in the description below, where I talk about rental guarantees and whether they are worth it. You really got to watch that one. So the ANZ Bank has now joined the party as they have upgraded their outlook for residential property. Now, this is based on the continued rise of many housing markets driven by owner-occupiers. ANZ are now tipping strong price rises over the next year, and this confirms similarly positive forecasts by Westpac and Commonwealth Bank. The ANZ's senior economists are predicting a very strong 2021 for Australian housing, building on the surprising uplift in prices experienced by most capital cities and regional markets this year. They say that we now expect house prices at the national level to rise over the balance of this year, they have said. Next year, we expect price gains averaging 9% across the capital cities. ANZ admits that its earlier forecasts of a 10% drop in house prices was incorrect. It is now predicting house prices in Perth that are likely to jump 12%, Brisbane 9.5%, and Hobart 9.4%. Sydney prices are expected to rise 8.8%, it's all very precise, but Melbourne prices will lag a little with a mere 7.8%. The strength is largely being driven by owner-occupiers, with low interest rates appealing to buyers in secure employment, they have said. Now, this continued rise in house prices means, as we've said, that first home buyers and also real estate investors who were hoping to snap up a bargain from a COVID-19 fall in house prices are all set to be very disappointed, those that haven't been disappointed already. The latest figures from CoreLogic show that prices in every capital city except Perth have climbed over the past 12 months, despite the worst economic crisis since World War II. And the major institutions like CommSec are forecasting significant price growth in the next 12 months. A CommSec senior economist says that the housing market has held up pretty well. I think it's held up magnificently, and is forecasting price growth in all capital cities in 2021 except Melbourne. Now, I think they might be revising that one too at some stage. AMP Capital Chief Economist Shane Oliver says that there is more positivity around housing than earlier this year, shocker, when some were forecasting a 30% fall, but the outlook varied between cities. Melbourne has seen a much bigger hit to its economy, obviously, because of its COVID lockdown, and it will need longer to recover, Mr. Oliver has said. Now, the Real Estate Institute of Victoria's latest days on market data, which was released in October 2020, showed that the average Victorian home is spending just 33 days on the market before being sold. And this is the lowest recorded since 2009. Results recorded in October show a market picking up strongly after recording a sluggish 71 days on market in September, coming back stronger even when compared to the average 40 days on market in October 2019. According to the Institute, this trend signals the recovery of the Victorian real estate market post-COVID-19 restrictions, with buyer interest higher across the market, with homes across the state taking a lot less time to sell. Now, homes in metropolitan Melbourne are purchased within just 25 days on average, which is much, much quicker than the 74 days it took to sell in September, and even less than the 34 days it took this time last year. Inner Melbourne recorded the shortest time on market at 24 days, followed by Middle Melbourne and Outer Melbourne at 27 days. In regional Victoria, it now takes a home 43 days to sell, which is down from 56 days in September and 55 days in October 2019. Now, with homes in Victoria taking less time to sell, optimism is returning to the Victorian real estate market, which is what the Institute have said. Days on market is a very strong indicator of a buyer's desire. Competition between buyers is heating up, and people aren't waiting to purchase the property that they want. They're getting on with it. Low days on market data is very encouraging as we are coming out of COVID-19 restrictions. While others have been predicting a big fall in Victoria's property market, we have consistently reported accurate, objective statistics that show the real underlying strength of this property market so far. Vacancy rates remain below 1% in most major cities and regional centres across Australia, which is placing upward pressure on those residential rentals. The latest data from SQM Research shows that vacancies were between 0.6 and 0.9% in October in 5 of the 8 capital cities: Perth, Adelaide, Canberra, Hobart and Darwin. Brisbane was a little higher at 2%. The exceptions to the low vacancy trend are Melbourne and Sydney. Melbourne rose from 3.8% in September to 4.4% in October. Sydney vacancies rose from 3.5% to 3.6%, both reflecting the effect of the COVID hit industries like hospitality and tourism, industries in which many workers typically rent or just simply can't come and travel around Australia. In regional Australia, most significant cities and towns have vacancy rates well below 2%, with many under 1%. SQM says house rents rose on average 2.1% in the capital cities in the past month, headed by a 4.2% monthly rise in Darwin, as well as significant increases in Perth, Adelaide and Canberra. In annual terms, house rents have increased 5.1%, led by Perth and Darwin, which have both increased 9.2%. The weekly ANZ Roy Morgan Consumer Confidence Index has risen a further 3.4%. It's all good news this week, isn't it? And this is reaching its highest level since February. The index has climbed for 11 weeks in a row. And the positive news about a potential coronavirus vaccine has seen a major reason for further rise in the index. The news about the successful vaccine trial no doubt played a role, as said by an ANZ economist. The strong result points to a potentially strong Christmas season ahead for all retailers. He said that the outbreak of coronavirus in South Australia is a reminder Australia is not clear of the virus just yet, but the trend in confidence is very, very encouraging, he has said. The Reserve Bank Governor Philip Lowe believes it is possible that the Australian economy could perform better than the central bank is predicting if there is good news on the vaccine front. If we do get further good news, he says, on the health front, we could have a rapid rebound. So to expand on that, the Reserve Bank Governor Philip Lowe has said that the Australian economy is poised for a rapid rebound from the COVID recession if the nation can keep the virus under control, given the pent-up savings and massive financial stimulus washing through our system. Mr. Lowe has urged Australian businesses to be brave and seize the opportunities of the digital transformation of the Australian economy in wake of the pandemic period. He has delivered an upbeat assessment of the economy, saying that Australia was on the road to recovery with the potential to bounce back quickly should the health situation continue to improve. He warns that there is still considerable uncertainty about that outlook, but he also said that there is resilience built into the system. It's been remarkable that in 6 months there has been 2 or 3 vaccines that are in these advanced stages of development. He also notes that despite the downturn, household balance sheets are in really good shape because we've all been saving so much. And this is being aided by a lot of stimulus in the system. Please don't forget to just subscribe to our channel. Leave me a comment below. Tell me the kind of content that you'd like and what you find useful. And don't forget to hit the like button too. I do really appreciate your support, and I will see you soon. Bye.